Welcome everybody to setting up and protecting your business. It's very important. There are a lot of different ways that you can protect your business. We're going to cover the highlights tonight. There's no way to cover every single detail in an hour, so we'll do our best to give you everything that we can that fits within an hour. And obviously over time you're going to need to consult with some of your professionals, like a real estate investor if you're going to do a real estate business or whatever kind of business you're going to be in. Make sure that you consult with your professionals, and especially in your state. A lot of these things that we will cover are state specific, so we want you guys to make sure that you are protected. We are an education-based company. We are not licensed attorneys, so we just want to be really clear about that. We will share with you different things that we've learned over the years. Again, those are from our experience or from working with other clients that we've heard have happened. So you'll be able to learn some of what to do and a lot of what not to do in your business. Tonight we mostly cover what to do, but when you work with us one-on-one, we tell you be careful about this, watch out for that. There's a lot of what not to do, because that is to me, it's more critical than knowing what to do. You guys can all go out on the internet and find tons of good business information. You can go to the library, you can do a lot of research, but at the end of the day, there are a couple of things that matter. One is that you're putting all that information into action, and two is that you're talking with somebody that understands how that information relates to you and your situation. Because if you don't get some good advice pertinent to your situation, you can get yourself in trouble. So that's a caution that I have for you, is be wise in what you do and do your best. It doesn't mean you won't make any mistakes, but it means you will avoid a heck of a lot of mistakes. So some of the additional coaching programs we have besides the real estate investing, because a lot of you only know that we do real estate investing coaching, but we also offer time management, money management, which includes debt elimination, how to budget. Some of you have never done a budget, and that's okay. Maybe your parents didn't teach you. They sure as heck don't teach you that at school very well. So learning how to budget, but if you do have a budget and you're not sticking to it, we help you with accountability to stick to it and take some of that money and move it into wealth building activities. And then life coaching as well. That can be anything you're dealing with: relationships, marriage, losing weight, divorce recovery, grief recovery, all sorts of things. So whatever you're dealing with personally, we can actually do an assessment with you, help you figure out where you're at on your 8 different categories in life, your 8 main categories, and help you increase where you are dealing with them, your coping mechanisms, and accountability on doing things that are important to improve your life and those around you. So life coaching is a very broad category. I want to not spend a ton of time on this slide, but just a little bit so that you guys understand there literally is there's no type of coaching that we cannot cover. We have covered as a team all the different areas that are out there, so we're more than happy to help you with that related to business, real estate, and life coaching. And then business coaching as well, startup and business growth. And we have some horrible background noise, so I'm going to go ahead and mute everybody. If you have questions, feel free to send them in to me and I'll read them out loud, and I'll unmute you later when we're at that point of the webinar. So business coaching, any kind of business. If you have a home-based business, what is traditionally known as network marketing business, any kind of business at all, because all of the basics are the same. It's about where you're at right now, where you want to be, and accountability steps to get there. That's why it's really easy that we can help you with anything you're working on, because we come from an accountability background. Steve and I both do. So steps to getting started with your business. Let's go right into what are you doing with your time, your space, your actual business setup, all of that. You've got a very limited amount of time. Isn't that funny? What keeps us united as a people is that we have some commonalities. No matter how rich you are, no matter what color you are, no matter where you were born, you have the same 24 hours in your day. But obviously some people use it differently than other people. So what are you doing with your time? And by the way, we have a whole time management segment that we do, and we will continue to run that throughout the year, because there are 2 main vacuums in life: money and time. And if you're not managing your money or your time very well, you're just losing opportunity. You're losing lots of opportunity if you're not managing your time. So time being one of the most important keys to success, useful time management being the important key. We want to talk to you about the basics of that very quickly, and then if you want more, come to our whole time management webinar that we'll be doing in a few weeks.
Hey, Christine. Sorry, we need to unmute Steve.
Oh.
And let Steve know to mute himself on his end, please. I apologize.
No, you're fine, but he's not on my list to unmute. He's not logged in on the webinar part. I don't see him.
I have him. I'll get him.
Thank you. See why I love Ty? He's like my right hand.
There you are.
Hey,
and there he is.
Welcome. And I just saw Jason join us too. Hi, Jason. He's new. He is a friend of my friend Tanya. So welcome, and we got some oldies and goodies on there. It's nice to see you all. Very, very nice. So time management being critical to your success. I want you guys to either come to the next time management webinar live if you can, or at least sign up and get the recording and start doing this. Even if you're not ready to start coaching with us right now, start organizing your time and deciding what is most important to get done, where are you organizing those things to get done on your schedule, and then maintaining balance means you are actually scheduling for all areas of your life. You're not going crazy heavy into business and becoming really rich and ignoring your family or ruining your marriage in the process. So we're very big on it's important to stay in balance. All right, order of priorities. These will be basic categories that you guys use. Okay, everybody's got slightly different ones. For example, business might need to be split into a day job and a business. So what we did over the years, Steve and I both worked day jobs where we were trading our time for a paycheck. When you start your own business, you get to write your own paycheck. So there's no ceiling on that. There's no cap. So you might want to put business, if you have a side business you're already doing, or if you want to start it, put that on your calendar. Block off hours every week that you're going to be working your business. And then your day job will go in different hours. So let's just stick with the 9 to 5 example because it's easy. You'll block that off on your calendar. But these are different categories you should have in balance every week. A little bit into the spiritual life, a little bit with the spouse, a little bit with the kids, a little bit with a regular job, a little bit with your business, and that other should include at least some time for yourself, some personal time. That might look like time with family or time with friends, hanging out with the friends, especially depending on your personality type, can keep you sane, especially where you're getting busier and busier. And if you guys have ever tried to start a business, you know it takes concentration, but you can't spend all of your hours working and not having any fun. So I like to refer to that little section as my me time. So that includes some fun time, some quiet personal time, and some family or some friend time. Okay, so family, you will look up here at the top and see where it's got spouse and kids separate. Some of you don't have a spouse. Some of you might want to start dating and put that in that time slot. Some of you don't have kids. Maybe you want to start making some time to try to have kids. Or you just never know. You know, if you don't have a kid section, it's okay. What do? Do you want to just put more time into your spouse category? Do you want more personal time? Do you want more business time? This is your schedule. So you guys decide what your priorities and how much time they get, but have a balance of all of them. Setting up time. Yeah, go ahead, Steve.
Let me just add, if you don't have a spouse, but your ideal is to be married, then one of the things you can do in that time slot is just do all the activities and things that you would need to do in order to attract the person that you'd like to be with. Nice. And so you can put in that time slot all kinds of things, personal development type stuff, and dating. So just put that as a time that you set aside to become who will attract the person that you want to be attracted to.
Excellent. A good way to look at it. Now with your time blocks, remember that every block, so every category, needs to have items to do for the week. So you should have an overall vision on what your life is, and then a closer up vision. So let's say related to business. You need a 5-year business plan. Where do you want to be at the end of 5 years? That's kind of a standard in the industry. And then break it down backwards. Where do you want to be by the end of this year? And where do you want to be by the end of the month? And where do you want to be by the end of the week? And you can see how it breaks down into smaller chunks that way. But when you get down to those smaller items, they need to go onto your calendar for the week. So what things are you doing? And you'll have big things. Like I already have a family reunion scheduled for June. That is a big important thing to me. That needs to go on the calendar so I can schedule around it. So you've got to put really important things on the calendar even all year long. I have things that I have down to remind me for next January. So it's January 2017, already planning for January 2018. Not to the T. There's a lot of stuff I'll get to decide in that current week when I come to that time. But I hope you get the picture. Block your really big stuff, even up to a year, 2 years, doesn't matter. Block it out. Maybe you want to take an anniversary cruise in 3 years. Write it down. Make it a goal. Start working towards it. But the smaller little blocks of time that are right in front of you, that's what counts. Everything that you do today and tomorrow and this week is going to help you fulfill your goals. So if you want to get more organized and you feel like you're wasting a lot of time, sign up for our time management training. That's where we don't just teach you about time management and walk you through the system of how to get it all set up, but keep you accountable too that you're actually using your time wisely and you're checking off your smaller goals every week, your bigger goals monthly, and you're aiming towards your yearly and 5-year and lifetime goals.
Let me just ask a quick question.
Sure.
Has anybody on this call been to our time management training?
Everybody's muted right now. Let me go ahead and unmute everybody. Okay. We've got somebody that chatted over. Let's see. We got a no.
I've watched part of the last recording that was sent out.
Okay, we got a part.
Okay. Were there some helpful hints in there that made it worth your while?
That would be you, Jeff.
I have to admit I was multitasking while I was watching it. So, and I've talked with Christine on multiple occasions over the last couple of years. So some of it was stuff that was familiar.
Okay. All right.
It should be. Jeff should at least know the system by now.
Yeah.
Inside and
I
out.
just want to put a plug in for that because honestly, if you don't have the time management piece down, there's not a whole lot else that's going to happen for you. So if you got it handled already, awesome. If not, pick that up and spend some time with it and make yourself a really great plan that will move you forward. That's it.
Yeah, I won't say that I have it down. I actually probably need to go and watch that thoroughly because I'm overwhelmed right now with everything I'm trying to do. So.
And if anyone here doesn't have a recording, I can get that to you. So don't forget that as well.
Yeah, that's what I'm saying. I watched like the first few minutes of it. So.
Yeah, Jeff has the recording. There are some new people. If you guys want that recording, just put it in your questions or your chat box that you'd like it, and Tyrell can email it out to you. And he'll have your email address because you signed up here tonight, so he can just grab it off of the listing for tonight and then send it to you. It gives you more detail on what we just covered. And then one thing I'll just plant, because of what Jeff said, and I know Jeff fairly well, great guy, always doing so much stuff. It's just that there are never enough hours in a day for people like him and me that have so much we want to do. So it's learning how to prioritize and get those things done, and then accountability on it. I will be honest, I love having accountability from other people like Steve and Ty that remind me, hey, you need to be doing this. They help keep my priorities on track. And so that's some of what we offer with the program is you might know what you need to be doing, but you're not doing it. So we do offer accountability Monday through Friday. So you don't do everything at once. You just pick 1, 2, maybe 3 things for the day that are important to you. And on the accountability calls, we just have you say what's the most important thing to you. Because if you do one important thing every day, obviously that adds up. Within a month, that's 30 Monday through Friday, sometimes 32. That you are consistently making steps forward. And obviously most days you get a lot more than one done, but part of it is getting the important money-making ones done. You can spend lots of time setting up your office, and And I'm not going to spend a lot of time on this part because setting up your office to be quiet, organized, have the right tools, that should take you a very little bit of time. But then doing the money-making activities, the marketing, the talking to people, the networking, those are the important business things that are going to give you the money that you guys want to complete your other goals. So what the accountability does is just help you stay on track that you are headed towards your goals, not our goals. We have our own goals, but we want to help you be successful in what your goals are. And there's no judgment on what those things are. If you need our advice, we'll give you, based on what we've learned over the years and in working with other people, what we recommend you might want to focus on. But really, these are your goals, and it's all about what's in your heart and what you desire. And so our job is to just help support you in those goals and get you there faster than you would get there on your own.
Could we go back to the last
Steve?
slide for just a second?
Okay, it's click.
I don't see it yet, but there we go. So the whole point of that picture is, and I wish we could see more of the desk and less of my face, but it was really about that desktop has a little sculpture thing on it. It has a keyboard, a monitor, a mouse, and a pencil holder. That's all that's on that desktop. And keeping your space uncluttered goes a long ways towards helping you keep your mind uncluttered, which will help you be a lot more efficient and effective in what you do. And so I just wanted that, as an example. It's nice to have appealing surroundings and stuff, but more important is to have things clean and uncluttered in order to work well. And so just wanted to underscore that a bit.
Okay, excellent. So choosing your name can be a little bit of a process. Sometimes you just know a great name off the top of your head, but there can also be times where you pick a really good name, like I did one time, and I got business cards made up, and I thought I had everything all lined out. I had my email set, and then I went to the state and I found out that it was already taken. So I got to throw those business cards right in the trash. So we'll tell you the right order to do these things in because I didn't know back then. Now I do. So you can choose a few names. You can settle in even on one that you really like, but now there are a few different places that you need to check it with. A good recommendation here that Steve made is avoid ambiguous names like ABC Enterprises. They're generic. They don't really say what your business is about. So if you can get a little bit of what your business is inside of there, that's very helpful for a few different reasons. So 3 different places to check. Google the name and see if somebody's already got it, and they might even have a website out there that's attached to that. And sometimes you can have a business name and a little slightly different website name or marketing name, but usually you're going to keep the exact same one. So just for simplicity's sake, let's go with that example tonight. You're going to Google the business name, then check with your state. So the Secretary of State is what it's called in a lot of your states. Division of Commerce. There are a few different names, but what you're looking for is the state-run office that handles all of the state names. So you're going to have a state business license, a corporate name, either an LLC, sometimes a DBA. You just set up as a DBA at the beginning, an SCorp or a C Corp. And then what you're going to do is check for a domain name to see if you can get a website that matches your business name. You can just do that on a lot of different places. GoDaddy, Bluehost, there are a lot of website checking names out there. And then what you want to do is when you go in, so this is what ours looks like. We have the Division of Corporations and Commercial Code. That's where we can do our business searches in the state of Utah. So we log on to this website, and then we can do a business name search. And when your name comes back as available, I recommend if you have decided on it for sure, you go ahead and reserve it, because there is a chance if you don't reserve it right away, somebody else might take it. And it's not very expensive usually. I think ours is $12 to reserve the name. And then go ahead and register your domain name if it's available. Same kind of thing. Sometimes I've been in there and the next day it's gone. So you have to grab it right on the spot if it's available and you are for sure set on that name. If you're still just goofing around, sometimes I go in there and I type it and try 10 different names to see what I like. So if you're just goofing around, it's okay. But once you've decided, grab the names. Steve, you have anything to add there?
No, that was really great. Thank you.
Okay. Some ideas on your business card. Now remember that your business card, your website, anything you hand out, this is stuff that represents you. So you want it to look clean, you want it to look professional. Definitely don't be the CEO or president. You kind of put a target on your back when you do that. It's good just to say you're the owner or a consultant. Even owner is a little on the edge of, yes, it's all me. Member is good, or consultant, business development manager, something that's a more generic title. It gives you some clout, some authority without having the target on your back. Just some suggestions, not a have to. Have a dedicated line or something that people can leave a voicemail on at least. You can put a fax number on there, although those are becoming more and more outdated all the time. Some people still really like them. Government still uses them more than anybody else I know. I don't even know many business owners at all that still have a fax, but the government, a lot of times they'll only accept fax numbers, so or faxes. And then your email address, I'd say, is pretty critical. Your phone number and your email address are the two most important things that you need on your business card so that people know how to get a hold of you. And then if you have your website set up, then definitely a website address on your card would also be good. That is the end of our business setup section. Oh, looks like we have a question. Let's see what we've got. Okay, there we go. That's for you, Tyrell. That question in that question box. So that's the end of the business section. Does anybody have any questions on setting up your business? Any questions related to choosing names? What you should do your website like? Anything that's more detailed than we covered so far?
So, what are some typical, like, you're saying have what you do in your name, right? Or have your name allude to what you're a part of. So in real estate, if investing, you have an investing group, you have holding, you have all these different things. If you go into property management, you sometimes you have property management in the name and stuff like that. So
Yep.
can you give some type of guidance as to pieces of a name that are good to have within real estate investing or property management or things like that, and some things you might want to stay away from that give a different type of connotation that we may not be aware of?
Mm-hmm. Absolutely. Steve, why don't you go first? I've been talking a lot, so you take a turn.
It depends on what kind of real estate you're doing. Some things I might avoid only because there's perceptions about them out there that are inaccurate, but there's still attitudes about them. Would be to put something in your name like flipping or flipper or something along those lines. I would avoid that. You could be a wholesale or a real estate wholesaler. Excuse me. You could be enterprises. Holdings is a pretty common one that's nice. If you're somebody who's going to be buying and holding properties, that's a good one. Mm-hmm. Trying to think of some other ones that I've seen out there, but those are some of the major ones that I've seen, mm-hmm. and they're all good. They all work.
Yep. I like them. So to avoid some of the generic things, if you do holdings or enterprises, just put your name or a name you like. For example, when we did a property management LLC, that was only for real estate rental property management, so it wasn't for fixing and flipping or everything else, but we did Holman Property Management because my mom's maiden name is Holman, so it meant something to me, and it was kind of a nice name. It looked good on paper. So it had a name instead of just ABC or 1, 2, 3. And so you can do enterprises, holdings, anything like that, but try to make it a little bit personal to you as well, something that sounds more real instead of maybe like it's a scammy kind of company, too generic.
Okay.
So like our company is Excel Real Estate Investing, right?
Mm-hmm.
That we do that. So that kind of we chose that name because it kind of gave the feeling of moving forward. It's got real estate in it. It's got investments in it. It kind of spells out what we do.
Yeah, that was a very on-purpose name. It's longer than I wanted. If I were doing just something like Fix and Flip LLC, let's say I set up one of those, I might do accelerated investments or accelerated property holdings, something like that. And most people don't ever see your LLC name anyway, unless you are advertising it as your main face, like Accelerated Real Estate Investing is our main face to the world. But you can have a lot of other LLCs that are just for you too, that hold your rentals or hold your flips or anything like that. So it's less critical to have names that the public can search easily. But because we knew that one was going to be tied to our website and people would be searching real estate investing, that we wanted those words in there, even if it was a little bit longer than we wanted.
Right, and if you're just doing a deep, you can do like a generic type of name for, say, an umbrella company. Then you can have DBAs that are a little more descriptive of what you do, and you can have several different ones of those. Mm-hmm. So you could have a holding company, you could have a wholesaling company, and they could be all operating under one generic umbrella title that the public doesn't ever see. I mean, they could look it up. It's not like you're trying to hide it. It's just you're not leading with that in your marketing. You're leading with the stuff that's more descriptive.
Yeah. All right, good. So let's get into asset protection. So setting up your business name can definitely be related to your asset protection. It doesn't have to be, like Steve was talking about. You know, your names, your DBAs can be very specific to what you're holding inside of them, but that doesn't have to be the one that's out there for people to see. So some of the advantages in general of asset protection, no matter where you hold them and what you name them, is that there are tax advantages, there is protection. So there's a little bit of a shield that comes between you and your assets when you're using actual entities like the LLCs, the corporations, or the trusts. And then protection from lawsuits, that's a very important thing. Now, I'm not going to say it happens very often. You may never end up in court, even being in real estate, which is a fairly litigious kind of business to own compared to others. But none of them are going to cover you from illegal activities. So if you do criminal activity inside of your entity, I don't care what people tell you, you're not exempt from any of those consequences of that. So just know that up front. But it can shield you from honest problems, like let's say that you had a loss inside of a partnership and the partner decided to sue you. If it was something inside of that, that's a different thing that then should not, if you have set it up correctly and run it correctly, be able to come over into your personal assets. They might get to sue you for everything inside of that entity, but not come and get your let's say personal house and your car and stuff that you own if you don't have it in something else. Let's just say you kept it in your own name. They should not be able to come after those. Now, there's never a 100% rule on this. I'm just going to tell you guys, I have an amazing insurance agent. She's been in the business forever and ever and ever. And she told me, look, Chris, if there's anything that your kids do, and let's say that they were out driving and they were driving drunk and they killed somebody, I'm not going to tell you you can ever have enough insurance that they won't come after everything that you have and maybe get it all. So it would be very situational, and I think that that is a very small, slim chance that somebody could come and get everything that you own, but it is possible. So what we're teaching is ways to become more protected, and there are different insurances. So not only are we talking about entities and structuring things correctly around you, but also having enough insurance coverage for the types of properties that you have and for the amount of assets that you have, because as your assets grow, you probably will need to, for sure, increase your insurance liabilities, maybe even getting an umbrella policy over the top of all of the other individual policies. So you may have landlord insurance on your rentals. and you'll have a different kind of insurance on your vacant properties for your fix and flips. And it's good to have insurance on every single thing that you own. Just like if you own 3 cars, you have 3 different insurances on those cars. They might be under one policy, but you still have to have insurance on each of those cars to get covered in case one of them has an accident or all 3 of them have an accident. It's the same kind of idea with properties. So what we're going to teach you are the basic types of entities that most investors use. And I did put on the Facebook recording, the little video if you guys saw. This isn't just about real estate investing. These kinds of entities can hold any kind of business. So if you are interested in a home business or you have one and you are not protected enough, you can put anything that you own into these different entities. But primarily we're going to talk about real estate holdings tonight. A sole proprietorship is the very simplest, easiest form of a legal entity, but there are very few advantages. An LLC is a hybrid between a partnership and a corporation. It's one of the newer kinds of entities, and it is wonderful. I'll just say that as a blanket word. It's wonderful as far as it provides a lot of protection, very inexpensive to set up, and you get to be a little bit more lax on the paperwork and the rules as compared to, say, a C Corp. So limited partnership is also another one that's very popular in real estate investing. It involves 2 or more people or entities. Taxes and liability will pass down to the partners according to their percentages of interest in the company. And so the company itself doesn't hold all of that money. It's called a pass-through entity. An LLC is the same way. And these are 3 of the very easiest things that you could do to get started in a business. Now, one little tip on the side, if you set up as a sole proprietor, you can actually file that schedule on your personal tax return. You don't have to have a separate business tax return like you will with the others. But it also gives you 1 layer of protection, where if you have other things in place, you should have at least 2 layers of protection. Even an LLC, a very basic single-member LLC, is still going to give you an additional layer of protection in your holdings inside of that, as long as you don't commingle funds or do something that's going to break the barrier, because there are things that will break that shield of protection between you and the assets and any liability within there. But for the most part, even with the 2 layers of protection, you should be good. And then depending on what your real estate attorney advises you to do, you may want to switch into an SCorp or a C Corp at some point when your liabilities and your holdings become greater. So the SCorp is a lot like the LLC, except, let me close this window, sorry. The profits and losses are passed down to the individual as well, so they call that a pass-through entity. And then the legal protection is less than a C Corp, but it's also less expensive and less complicated. So again, we're going to tell you, I'll tell you right out front, I've only had a C Corp on 1 big project. Everything else I've been able to do in an S Corp or an LLC. So C Corps are just, they're more complicated, more expensive to set up. For example, you might be looking at the difference between $500 to set up an LLC, $1,500 to set up an S Corp on average, let's say, and a good $2,500 to $5,000 to set up a C Corp. So if you don't have money-producing assets in real estate yet, there's really not a lot of sense in setting up something really expensive that you may or may never use. So we're big fans of start small and as you go, add on. Steve, you got anything to say or add to that?
Yeah, I just wanted to mention that you can convert your LLC to a C Corp or an S Corp or whatever. It's a simple process, and everything pretty much stays the same except for the structure. So you don't lose anything by converting it. And so just keep that in mind, that that's a flexible thing for you.
And this is one of those times where I tell you what to do, what not to do. I'm going to be really transparent here for a minute. This is my favorite thing, to expose my mistakes to the world. So I went to a CE class, and he was fantastic. He was a lawyer, and he taught about what Steve just said. You can convert your LLC into an S Corp. No harm done, no loss. Well, if you're someone like me, there could be a problem. So I went ahead and converted it. It was only $50 to pay their office to do it. You can do it for yourself. You just download a form from irs.gov and you can do your own conversion. But what he neglected to mention was that if you backdate, what happens is this. If you are an S-Corp, you have to file on time or you're going to get penalties. If you're an LLC that doesn't own anything, and I say this because it was several years ago, the rules might be different, I'm just going to disclaimer that. But several years ago when I did this, if I didn't owe any taxes inside the LLC, then there was no penalty for filing late. Well, I backdated that S-Corp 2 years. He said that was the max at the time that you could backdate. So I set it back to 2 years, and then I was going to convert everything over and do the tax amendments to change and get the better tax deductions. Well, what I didn't know, it was $179 a month. I'm going to do the math just for fun, because I don't remember the exact number. So it was $179 a month times 2 of us as members in there. So $358 a month in penalties times 24 months, $8,592. How would you like that as a tax liability? I wasn't too happy. It wasn't actually my tax liability. It was my penalty liability. I just throw it into the same category, sorry. So if you are going to ever backdate and convert your S-Corp, make sure that you didn't owe any taxes. Make sure you talk to your attorney. And if you do file it, starting right away, make sure you file your quarterlies on time and your end of year tax return on time, and then you won't have a great big huge tax penalty like I did. Oh.
Wow.
Yeah, isn't that fun? That was one of those, hey, you know, even if somebody paid $5,000 for a top-end package and I just saved them $8,500, sometimes my stupid little mistakes could save you lots of money if you actually listen and you learn from what I did wrong. I have done a lot of things right as well, so don't be scared, but I've done enough stuff wrong. I will share it with you even if it makes me look really not smart. So the Nevada Corp, this is something that you guys have heard about, I'm sure, if you've been out on the internet or you've researched or you've been to any seminars, because it's kind of a cute, popular little thing that, hey, just set up a Nevada Corp and then you don't have to pay any taxes. The part of this slide I'm going to point out to you, right down here, Steve put, you cannot be successfully sued in a Nevada Corp. Truth, can be sued, and if there's criminal activity, you can be personally liable. Number 2, you do not have to pay taxes on income in a Nevada corporation. The truth is, as long as you're doing business in Nevada, that is true. But if you do business in any other state, let's say your rentals are in Florida and your entity is over in Nevada, you are still liable for the taxes on income to be paid to that state, even if you're listed as a Nevada Corp in that state. So don't get suckered into the Nevada Corp fixes everything myth that is out there. Now, when you're structuring multiple entities, number 1, talk to somebody that's really good at this. Either they're a very experienced investor that's done it before if you don't have a lot of money to do it, or just choose not to spend a lot of money on it, or if you want to spend the money up front, talk to a really good real estate attorney that does this sort of thing. There are real estate attorneys that are just better at contracts, and there are ones that are better at entities. You should try to get a free consultation with them, and if they won't do a free one, because some do, some don't, most do, some don't, you can actually sit down with them and ask, what are the areas that you are more experienced in? What are your specialties? And try to find somebody that's really good at entity structuring, because there are better and worse ways, more effective, less effective ways to do it than others.
Just a little note here. If you choose to do this and you do this through another company that provides services for this sort of thing, I want you to be aware of something. I knew of a program that was advocating for multiple entities and putting them in a structure like that. So they had people buy like 10 entities at a time. So they'd buy like 10 LLCs and then put them under the umbrella of a C Corp or an S Corp. And they didn't even have a property yet. So they had all of this stuff, that they had to pay for the paperwork for. They had to file all these forms. They had to pay somebody to do all that for them. They were racking up all of these expenses without ever having a need for any of it. So
Yeah.
be cautious, be aware of that. Putting entities within other entities can be a great idea, but only add stuff as needed. Don't buy a bunch of stuff in anticipation of being a real estate mogul someday.
Mm-hmm. And even though I firmly believe there is a place for anyone in real estate that wants to get involved, it could be in the title end, it could be in the wholesaling end, it can be in rentals, it can be many different places. Some people with money just want to be investors. You could just be a very passive private investor in real estate. You can be an active investor. It doesn't matter to me where you fit if you want to be there. But here's what happens sometimes. People get excited because there is huge income potential. They try some things, they don't go that well, they decide it's not for them, and then they quit. Well, if you just spent let's say $5,000 on entities, and you did one flip and decided that is not for you, as a coach, I would tell you, let's try some other things. Okay, that didn't work for you. Either we can fix it and you can learn from that what you did wrong and go at it again with a little more caution, a little more experience and wisdom, or let's just get you into a different type, like wholesaling that isn't as risky. You're not going to lose any money. Sure, you might not make as much, although you could make as much wholesaling, but let's try to get you somewhere else. But for the people that just say, too stressful, I'm out of it, it's not for me, what are you going to do with all those entities? It's just a waste of money. So that's why I tell people, make sure that it's for you first. If you're 100% committed, you know for sure you're going to make it, go ahead, set up an entity, 2 or 3. But if you're not sure, set up one entity and do it really inexpensively. Or, Steve, why don't you share with them what you had told me about it? You have a specific step-by-step is what I'd call it. If you're not quite sure, where do you start? That's a good place, and cautionary doesn't cost you anything really. And then the next step and the next step.
I'm not quite following you.
Well, you were talking to me another day, or maybe earlier today, I don't know, my days all blend together sometimes. You're talking about getting people started, and maybe at first they could just do it as a DBA, and then they could go to a single member LLC or one LLC, and then maybe later an SCorp or something like that. You had some ideas. So if I were just getting started, just pretend like I am a new investor, I think I want to fix and flip, but I'm not sure. What would you advise me to do?
I would probably advise you to maybe do the even a sole proprietorship until you decide that you're going to be owning property or that you need to shelter some income. And then I would move to the LLC. And then I would just sit on that LLC until I had other things that I needed to work with. So let's say I start out in my business as a wholesaler, which means I'm not going to be holding on to anything for very long at all. I need a lot less asset protection there. Mostly I'd be looking for any kind of tax benefit I could get. And, any kind of liability protection that I might need. But then when I move from just simply wholesaling to other people to holding on to property, say rentals or something like that, that's when I want to start doing that multiple entity kind of stuff and maybe start to use things like SCorp or a C Corp even, if I'm going to be large enough for that. I'd start off with the SCorp and then maybe graduate to the C Corp if I had employees. Really, you don't need the benefits of the C Corp until you get to an employee level. Mm-hmm. But just gradually start building as needed rather than trying to step into a big pair of shoes and see if you can figure out a way to fit them.
Yeah, excellent. Thank you. That's exactly what I was talking about. I just couldn't remember the exact ones you said. So sole proprietorship to LLC and then possibly into S Corp or C Corp, depending on how big you go. I like that. That's a nice flow. Mm-hmm.
Quick question. You're saying, Steve, that you don't really need a C Corp until you have employees. Is there ever a structure that would have an LLC with the C Corp under it, or would the C Corp always have to be the top dog in a series of businesses?
You could do it that way. It seems to me that would be a little bit backwards. The C Corp works better as part of the structure under an LL or under a, excuse me, I said it backwards. The C Corp works best as the umbrella company.
Mhm.
If you're going to have buffers between you and what goes on in your business, you probably want that at the highest level. And they'd have to go through the LLC and the C Corp in order to get to your personal assets. And that's why you would want to set that up that way.
Okay.
Yeah. But honestly, Jeff, if you're getting to the point where that's what you're thinking about, I'm always going to say, number one, talk to your attorney about the structuring because they are the ones that do this day in, day out. They're really the professionals. But my little 2 cents would be, if you're at that point, I wouldn't even put LLCs under the C Corp. I would put them separate and try to isolate assets that way so that they're not all under one umbrella unless there's a specific reason your attorney says to do it that way. Usually the more separated your assets, the better. Like some investors will even keep one rental property or one property period underneath one LLC. They won't even combine them ever because of that, because of the barriers of liability that it creates. So that's nice.
And one other thought about that is that when you start to have a need for multiple entities, you want to set limits on how much is being held in any one entity. Some people limit it by the number of properties, other people limit it by the total value of the assets. But you want to keep breaking it off so you don't have too much in one pot. So that if something goes awry with one of your properties, it only affects a few other things other than your whole structure.
Yep, exactly. All right, is that good, Jeff, or do you have some other questions on it?
Yeah, no, that's good. He made that comment, so I just wanted to ask to get clarity on that. So
Yeah, and
generally.
one last note is that a CPA or a good accountant can do this as well as an attorney.
Thank you. And you guys can do it yourself. I don't want to ever say you need to or should because there is some liability associated with it, but forms online these days are so user-friendly in most states. So ours that we showed you earlier, that division of corporations, nowadays we can log online, we can sit in the comfort of our home, and it walks you through with asking you certain questions. What about this? What about percentages? What are the addresses? Who are the holders? All of that is just right there online, and it's pretty darn easy. Set it up yourself. So usually what I tell people officially, though, as a coach is go have the first one made by an attorney, pay them to do it, or like Steve said, a good CPA, a good accountant. A lot of them know how to do this sort of thing and sometimes even have the software. But then you can take that as a template, and if you're going to create multiple LLCs, instead of buying a big, more expensive series LLC, which is an option these days, so it's basically one LLC but little compartments inside of it with different liability protections, you can just set up your own LLCs. It's really not that expensive, and then instead of paying for one big chunk at once and using them as you go, you just pay for one, and then when you need another one, take that as a template and make your own, and you can continue to make LLCs that way very inexpensively. So I have been fortunate. I've hardly had to spend any money on entity setup. It's been really nice.
So I did have another question because I just thought the reverse of that. Based on what you're saying with the C Corp, is there ever a situation where you would possibly have employees under an LLC? Just thinking that if you have one, maybe two employees, you wouldn't necessarily want to jump straight to a C Corp.
Right.
In my mind, I think corporation, big company, right?
Right. So some of the real advantages you get in a C Corp come to you when you've got, like 20 employees or something like that. And so at that point, you really would want to take advantage of that. But there's nothing wrong with having employees in an LLC.
Okay.
In fact, you should be an employee of your LLC. Right? You should have your income separated out so that a certain portion of it is W-2, so that not everything you do is taxed with
capital gains.
Personal.
Your higher self-employment income rate is generally higher.
Income. Yeah, that's what I was trying to get to. Yeah, self-employment income is taxed at a higher rate than W-2 income, so you can set up a salary for yourself, pay yourself the salary, and then pay whatever's left over as dividends from the LLC. And that also helps you with your tax burden.
That's where your accountant can come in really handy. So whether it's a coach you hire, a real estate attorney, a CPA or accountant, you might pay some money up front, but they should be able to save you that money back and then some in the long run. So a good CPA or attorney or accountant, and I want to say it that way because you don't always need a CPA. Sometimes you can hire the less expensive accountant, and they're very knowledgeable. They should be able to easily save you the money back times 10 in most years of structuring your entities and your income correctly so that you pay as little tax as possible. Somebody who's not aggressive in structuring that way, you need to shop around and find somebody else.
Well, it's best if you find somebody who's also an investor because they know the ins and outs of all of that.
Yeah, if they own some properties, they understand it. It's true. Okay, so forms and filings. Remember that there are reports and forms that need to be filed when you have entities. This keeps you in the good standing so that you are able to get all of the tax benefits that you can out of being an entity. If you don't do what you're supposed to do and you go into default or you get audited, you could have some problems. Now, most of the paperwork is very inexpensive. Or free online, like you can download a lot of it for free, either from your state sites or just Googling around on the internet. But it's just the time to do it. Just take that time, and whether it's yearly or if you're required quarterly or monthly, just do the minutes, do the whatever is required, and then stick it in a file, report it to the state, make sure that you stay in compliance. So the different costs, they vary quite a bit. For example, here in Utah, we're only $70-something. In California, last I heard, it was about $800. There's a broad range. So you have the cost to pay somebody to set it up, or free to do it yourself, but the cost to file it, the filing fee with the state, is what usually gets you. Now that's just the cost for creation, but then there's also the cost for the people that are setting it up for you that can vary anywhere from a few $100s to thousands and thousands of dollars. Very broad range. Try to figure out what you need. Ask a lot of questions. Don't jump right in. Try to be smart about this. And if you shop around and compare, you'll probably end up okay and not making a mistake on who you hire.